K Kim here with the Traders Club. Welcome to the market update. Today's Friday, but I am recording this intraday. Market should be open another, let's see, 2.5 hours as I record this video. As always, let's continue with our analysis here. Let's start with Spider, Diamond, Qs, Russell, Semi, and the banks, and we'll call it a day after going through those. And hope you guys had good week trading, maneuvering, and navigating through this week. Market has been pulling back for the last 2 weeks, and we'll talk about that. Let's do a little bit of maintenance on our charts here. I have not changed any of these levels since we did our video last Friday, right? Last Friday was That was May 3rd, and so that's the that day. That was the last time we did it, and we talked about this level here. We initially saw that market gapping down quite a bit on Monday, and we saw that follow through on that level, right? That was a level coinciding with that. And then this little bit of gap area we annotated last week, 289, 288, right? Initially we saw the bounce, but market gap down again next week. And then we're here. We're just finding support at that 50 EMA right now. So let's do a little bit of maintenance here. Let's get rid of that. Get rid of this. Get rid of that. Get rid of these levels. And what we're going to do is we just came and filled this gap. Right, we just came and filled that gap, and that was an island reversal. And so, remember what we talked about? When the gap gets filled, what does it do? It acts as instant support, and that's kind of the reason why we're seeing that long lower wick here, and dips are getting bought. So what we're gonna do? I'm gonna actually put this here, right on that 282, and there's a tiny gap. It's a small gap though, around 280, 30, 380-ish. Here, I'll show you what that gap looks like. It's this gap. So this gap's been filled. You see that gap has been filled. Let me do this. Get rid of that. So this gap has been filled. That's where we're seeing some dip buyers coming in here. But we do have a very small, tiny gap here. You see that? It's not big, but that gap is there nonetheless. And so that's kind of where we're annotating here. So that gap is closed, so we're gonna get rid of that. But we got the small gap there, so we're gonna do this. 282, 288, right? So we're technically, as I record this video, again, I'm recording this intraday, technically we're still staying above that 50 EMA. 20 EMAs are pulling back a little bit. But when it comes to intermediate term trend is concerned, we are still in an uptrend as we're seeing the 50 EMA still rising. We got the 200 there, 100 there. So I think 280 to 280 is the level to watch going into next week. And that 50 EMA, again, 50 EMA has been acting as support here. And 260 was an important level because it was that prior support. And I think a lot of people are waiting for that level to become potentially resistance. I think almost all traders and investors are looking for that level to become that resistance, maybe making that lower high before retesting the December lows or something like that. But that 50 MA kind of scooped it up. We pulled back here in March 11th, and then that's where we saw that 50 MA coinciding with the gap area. And then we finally moved up higher, and then now we're back at that 50, and then that's the level we had, that gap area. We just got filled. The first gap, that was a big gap. That's a pretty sizable gap here. That gap has been filled, and then now we're retesting this level with a smaller gap at 280 to 280 level. So that's kind of where we're at. And as far as the market is concerned, market is so far is down about 3%. 3% is not a whole lot. And let's also annotate the gap area here. So we got that down gap. So we got that down gap from the bears. And you got the little bull gap here. This bullish gap has been filled. So it may get up here. But the down gap is going to make things a little bit hectic. I don't see this thing going to all-time high anytime soon here unless we see this thing getting up and gapping it up and making this into an island bottom reversal. But we've seen a lot of island reversal before. All these green Boxes are island reversal. This was island reversal initially before it got filled today. So if this gets up here, we start to fizzle, we may pull back to either retest the lows or 50 MA, or maybe even come down to fill that 280, potentially to retest that 200 SMA, 100 SMA. 200 SMA currently residing at 277, 100 SMA is 274. It may get a fill it. Remember, a lot of times when gap gets, again, opposite is true. Remember, this gap was filled, right? Today and yesterday, what happens? You see that the wick, that lower wick that coming in here, telling us that the dip, that gap area is acting as support. So we have to be fair here with the bears as well. When this thing gets up, fill these gaps, you're probably going to see something like this in an opposite way, where this thing comes down and see some kind of a shooting star candle or something like that, right? So best way for the bulls want to, now want to deal with it, get up here and just jump it up, gap it up, make it into an island. But again, we're just too ahead of ourselves. But if we do see something like that going into next week, I'll tweet it out or something like that. You can follow me at 2K Kim on Twitter. But for now, we're seeing that the hammer candle developing there, and we're still staying above the 50 EMA. We want to give benefit of doubt to the buyers in the intermediate term, but at the same time, we want to understand that the volatility is probably going to stay for weeks here. We are extended. Market did 25% move since the December lows in just 4 months. In just 4 months, we did 25% move. Probably there's some people taking profits up here. And I talked about in the last week's video that I've been closing on my calls as well. Though I am holding all of my long-term investment positions, right? And those are the underlying securities on individual companies, which I've been accumulating since, early December or early 2016. But I've been closing out my call positions last week. I'm still holding some. It's been adding a little bit here and there recently, but I think again, with this bearish divergence there, it could make things a bit hectic. I wouldn't be surprised to see this thing maybe coming down, making new low. But at the same time, keep in mind that we are still in a bullish tone. So I want to give more weight to the bullish scenario, right? And we talked about this last week, that market perform miracles? Yeah, we could see this thing continue to see getting higher and respecting that 50 MA. But the probability of that is low. And I think a lot of people are waiting for a steeper decline. I think some people are thinking this thing coming all the way down to 260. I don't see that happening. The worst case scenario I see it is 270. The worst maybe 265 retesting. And that will be like the worst case, right? Retesting 265, 270, this level right here. That will be, I think the worst is around there. But I think more likely scenario is if market decides to pull back more, I think 280 is going to provide support, 280, 278. We have that 200 SMA there, and then we got the 100, and then we also have this gap, we got that gap. So I think there's a lot of support in this 280 to 270. There's a lot of support in that vicinity. And I think that those levels going to act as pretty significant support there. So I think anywhere in here, I would probably start to look for some opportunities to go long on some of the underlyings, or maybe some calls on the indices or something like that. Here, I think I want to kind of watch and see, because we got that bearish gap, and so that's gonna make things hectic. We might stay here for a while, and that's kind of what I'm thinking here. We may even make new low just to shake some people out and just create a little bit more panic. But this whole downturn has been pretty methodical, where we saw this move, we saw gap down, and then it just been really lethargic. We didn't see, we're not seeing something like, something like this, right? The bears are going to say, well, K, we're going to get it. We're going to get it, K. We're going to get it. This thing is going to go to 200, K. That's what the bears are going to say. I don't think we're going to see something like that. We're probably going to see a little bit more choppy. We may see, you know, we may see something like this, or maybe something, you know, I think once we get up here and then maybe pull back something like that. But with that bearish gap that has formed here, right? And that's a pretty sizable gap too, right? It's gonna make things a bit hectic. And that's kind of what I'm thinking here. So I think we're gonna stay here for a while. I think we're gonna stay in this zone for a while here. And we'll see how it plays out going into next week. And if we do, again, I am recording this intraday. If we do close the day with bullish with the bullish hammer, and what I find is that I do see not on here. What do I see here? Let me remove that, and then I bring in this one. Just a little bit of, because we just feel that this is 65 minutes chart, guys. You just see a little bit of bullish divergence here. It's not super clean or super, you know, potent sign, because it's very grindy. You see that how it's very grindy. Like potent bullish divergence would look something like this, like something like that, right? And then like that, but it's very grindy, so it's not really potent. But we're seeing a little bit of bullish divergence there. That could make things pop, especially if we do have a bullish hammer at the end of the day, and we see that pop on Monday. Probably gonna at least come retest the gap area, and if bulls want to push a little bit more, probably go up and fill the first gap here, and then fall back. That's kind of what I'm thinking. Again, if bulls really, really want to not deal with this gap at all, get up and just gap it up. And then let's go to 300. So we'll follow up next week. And then we'll see how these levels play out. And we'll go from there. Let's go to Diamond. Diamond, since last week, we blew through a lot of these levels. So let's get rid of those. Right, so a lot of those gaps were filled. We got this down gap there, and this gap is still open. So what I'm gonna do, I'm gonna put that right there, like that. So 250 to 250 is gonna be the level. Currently trying to find support at that 200 SMA vicinity. We got a little two hammers there. I wonder if. Yeah, technically we're now forming rising channel type of deal there. So that's kind of what we're working on, right? We got that. We're just trying to get up here, and we got that channel. We are below the 50 on the diamond, but if we do lose that, we're probably gonna come and retest the 200, 100 SMA, which is coinciding with, and 250 to 250 is a pretty solid support, But for now, rising channel. That's kind of what it's doing. Before, remember, this is what I said. This is why, you know, these wedges sometimes get tricky, and then it becomes something else, right? So now it's now becoming that. So we're kind of in this rising channel type of pattern there. So let's see if we can hold that, and then maybe get up here and to fill the gap. And once that gap gets filled, again, that's probably going to act as resistance, probably pull back to retest, and we'll follow up next week. Qs. So again, from last week, we lost this level 187, which was that prior all-time high, right? We initially bounced, but we fell. And we threw what? That little bit of gap here. We got this gap too. Got the gap area now. And last week we put in this 181, 177 area, coinciding with that 50 MA. And 50 MA was important here, back in March, early March, and then was important throughout late January, right? That 50 MA did act as resistance, and then it acted as support, and we're acting as support. That same level is coinciding with this gap area. So 181, 177 will be important level. If bears really, really want to make things hectic, gap it down and make this entirety as island top. If we see something like that, then I have to bring in my Fibonacci here. Probably this thing could come, because that island top is gonna put pretty deep, you know, impact, mostly psychologically. And this could bring it down to about 168, 167. If it does, you buy that dip, because that's a good level there. But for now, we are holding. For now, we're seeing a little bit of hammer there. As you can see, Dragonfly Doji type of candle there. And then a little bit of hammer yesterday. Right? And this is a gap area. So that gap area coinciding with that 50 MA. And this thing just pretty much came straight down, but it was lethargic. We didn't see straight flush down days yet. It's always been the deep, because buyers, I mean, dip buyers been consistently adding. I mean, you can see every downturn, dip buyers buying this. I feel like a lot of people are now thinking that this, you know, they're buying this up, you know, because like people missed out and they might have buying it a little early, but they're buying it up. That's what we see, that every decline, like what happens is it starts the day with a gap down, and then it flushes, and then throughout the day, the dips are getting bought. And that's usually, a lot of times it happens, you know, this is kind of a pretty usual, like, price action after market is kind of getting to a long bullish uptrend. Because you think, because that's what everyone's thinking, it went up so much, well, it should come down. It's not always the case. That's not always the case. I mean, look at back in 2000, like these ones, you know? I mean, you thought after this kind of move, this should come down more. It didn't. It like consolidates and gets higher. It's not always the case, you know? So when the trend once gets up, it's not going to be easy short. It's not going to be easy short. So that's where we're finding support there. Let's go to Russell 2000. So Russell 2000, we blew through the gap area. Some little tiny gap did act as resistance there. You know what? I'm going to remove that first. I'm going to remove that, remove this. I'm going to remove some of these levels. I'm going to annotate that gap area right here, because there's a down gap, right? That's the down gap. Okay, I see what's going on here. We got a little gap. We got little down. That's where we're finding support here. See that? That down gap here. Let's go to hourly. Yeah, that's where we're finding support here. There's a gap. See this? See this? That gap is what finding support. And you can see we got a little bit of that going on. A little bit of that going on here. Yeah, we got double hammers there. Let's see if that level holds. If not, we got the 100 SMA at 150. So let's see if 153 and 152.94 is gonna hold. If he does hold, if he continues to move higher, that down gap is gonna give a bit of trouble there for the bulls. Unless again get up and then gap it up to not even worry about it. Semis pulling back here, and this is a great cultivation. You know what bears say? That's a trap. That's not a trap. That's a cultivation. Go back and study every single 15-20% corrections, and the market goes up here, make new all-time high, and then a lot of times what it does is it continues trend to the upside. I mean, like, right, we saw that decline and then makes new all-time high. Well, like this thing actually didn't pull back and then it just broke out. But this thing's pulling back and retest this time. But it's cultivating higher lows, right? It's cultivating intermediate to higher low there. So we're retesting now that prior resistance, potentially as new support. We got the gap area here too. We got some gap area here. And yeah, let's do this. Let's annotate the gap area. I mean, this is gonna be a little bit more gapier index, but ETF, but that's kind of where we're finding 107, 104, right? We got some down gaps here too. That and some here. So it's probably gonna make things a little bit, this down gap's gonna make things a little bit hectic, but we got that up gap. We're finding support at this time. And 100 and 200 SMA has just seen that cross. As you can see, they saw that cross. And usually when there's that cross and there's that golden cross. And usually that kind of stuff occurs. I mean, even here, right? There is that cross, and then there's that golden cross. Some tangling action there, but there was that golden cross. So that's usually long-term bullish signal. One last XLF. I'll let you guys go with this one. XLF is holding the levels. I don't have to change anything in my chart here for this one. This is a neckline we talked about. We broke above it, cultivated higher high here, intermediate term. That's a good sign. And we're pulling back to retest, and that's the level we talked about last week, 270.26. That's a gap area coinciding with that 50 MA and the neckline area and the prior resistance as new support. We find so, and so it looks like, you know, I mean, looks like now SPY is turning green. But it looks like we are at a pretty pivotal level looking at the indices here. Kind of I think this is a first pretty strong support level. So I think only thing now going into next week, are we able to see a follow through? And when we do, how the market is going to deal with this down gap. I think that would be kind of what we should look for next week. Right, so if I see anything, as always, I'll be tweeting things out on my Twitter at 2KKim, and we'll follow up next Friday. We'll go from there. All right, so you guys have a wonderful weekend, and good luck trading next week.